Perfectly there. Perfectly there, sir.
Yes, sir. Let us start, sir.
Good evening, Girish Ahuja, sir.
Good evening to everyone.
Good evening. Good evening, members. Welcome to the virtual CPE meet from Warangal and Karimnagar branches and Nizamabad CP chapter of SARCF ICI on the analysis of new section 9B and amendment of section 45 subsection 4 of Income Tax Act 1961. Now I request to the chief guest dignitaries, guest of honor, speaker of the day, ex officios, and Warangal Karimnagar branch chairmen, secretaries, and management committee members, Nizamabad convener, deputy convener of the today's seminar. Now I request all the members for the lighting of the lamp. Please kindly stand for the lighting of the lamp. Now I request kindly join us for the institute motto. Sir, kindly stay.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तदेव शुक्रदब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैत 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 एतद्द्वैत.
Thank you. Thank you. Thank you all members. Now I request CA G. Ravi Kumar Garu, Chairman of Warangal branch of SARC of ICA, for the welcome address. Over to you, sir.
Thank you. Thank you, Hari Krishna. Namaste. Good evening, everyone. Respected Chief Guest of today's evening, Sri Devaraj Reddy Garu, ex-President of ICAI. Respected Speaker, Sri CA Girish Ahuja Garu. Respected CCM, Dynamic CA Dayaniva Sharma Garu. Respected SARC member, ex officio of Warangal branch, Sri Chengal Reddy Garu. Respected SARC member, Sikasa chairman of SARC, ex officio of Karimnagar, Sri Naresh Gelli Garu. All respected MC members of Warangal branch, Karimnagar branch, and all conveners, deputy convener of Nizamabad and chairman of Karimnagar branch, all respected members, welcome you one and all. A warm welcome to you one and all. Today's seminar topic is section 9B and subsection 4 of section 45 of IT Act, which are introduced by the Finance Act 2021, which are effective from assessment year 21-22. After introduction of these two sections, I think we require in-depth knowledge to advise our clients. And this is a great opportunity to enrich our knowledge on section 9B and 45.4, because today we have an eminent speaker, excellent speaker, well-versed speaker, and we can say Bhishma Pitamaha, or we can say encyclopedia of income tax. Such a great person. We are very, very happy to have such a great personality as a speaker of today's seminar. I request all the members kindly let us utilize this opportunity and clear all our doubts and enrich our knowledge. I also request the members, please get ready with your queries, questions, doubts to post in chat box. At the end of this session, after speakers presentation, we will have question and answer session that will be taken care by Sri Ambarish Garu, Nizamabad CP chapter chairman. And a warm welcome to you, sir. Girish Ahuja, sir. A warm welcome to you on behalf of all participants today, sir. And
Sir, Ravi sir, chief guest is online, sir.
yeah, we have another distinguished personality today as a chief guest, Sri Devaraj Reddy Garu. Our chief guest does not require an introduction as he is well known to all. Devaraj Reddy Garu knows everyone in Warangal, Karimnagar, Nizamabad by name, and every member of this area know him very well. He is known for his wonderful administration and high achievements of our institution as he was president of ICAI. We are so honored to have him as chief guest for this evening. We are very grateful to him for accepting our invitation and becoming the chief guest of today's seminar. I still remember one thing which was not forgettable in my life. When our chief guest was president of ICAI in 2016-17, I was the secretary of Warangal branch. CA Rajendra Kumar was the chairman of Warangal branch. In that year, we have arranged a public meeting. It was a great success. In that meeting, I have shared dais with then president, today's chief guest, Sri Devaraj Reddy Garu. It is really a memorable thing in my life. A warm welcome to you, sir, on behalf of all the participants of today. Again, I welcome you one and all. Once again, I welcome you one and all. Let us utilize the expertiseness and experience and versatile knowledge of today's speaker and clear all our doubts. Thank you. Thank you very much. Over to Secretary of Harikrishna.
Thank you, sir. Thank you for your valuable speech. Now I request CA Chengaleddi Garu, ex officio of Warangal branch, regional council member of SARC of ICI, to give his speech. Thank you, sir.
Hare Krishna Garu.
Over to you,
See,
sir.
every time we are addressing, please allow the today's chief guest as well as the speaker to take more time so that the members will get benefit. Naresh Gilli sir, we are always interacting with the members of both the branches. My sincere request to you.
Okay, sir.
Today's chief guest as well as the speaker of today's session. It is a burning topic. Yes, there are a couple of changes, interesting changes in the topic.
Yes, sir.
Please, speaker to take and get benefit out of that. Wish you happy learning. Thank you.
Okay, sir. Thank you, sir. Thank you. Thank you. Now, Naresh Chandra sir. Now I request CA Naresh Chandra Jalli Garu, Sikasa chairman.
Definitely. So I concur with Chengal Reddy Garu view.
Okay, sir.
We have a rare opportunity of having Girish Ahuja ji.
Yes,
so
sir.
I think we'll give more time to him. Thank you for giving me the opportunity.
Thank you, sir. Thank you, sir. Now I request Central Council member CA Dayanivas Garu or to give his valuable speech to the participants. Over to you, sir. Central Council member.
Thank you very much, Secretary. Quickly, on behalf of Naresh Gili ji and Changal Reddy ji, I would like to say, a guru like Girish Ahuja sir will always be admired by all of us to be heard. Correct? And more importantly, Girish Ahuja sir, you are one teacher who has actually taken class for one student also. And today, our privilege in Telangana state that all these we have only 3 branches, Hyderabad, Warangal, Karimnagar, and you have consented to come to these small branches and give your address. Itself is the message which is shown how much love and affection you have for members. And really, we are delighted to have you, sir. And more importantly, the technology which has been there, it would have been very difficult for us to get you in physical. But yes, because of virtual message, you are there with us. Thank you very much for joining us. Sir. Thank you very much. Over to you, Secretary. Please go ahead.
Yes, sir. Thank you, sir. Thank you, sir. Now it's a time for the first man or chief guest, today's chief guest, Central or Devaraja Reddy Garu, past president of ICI. Now I request Devaraja Reddy Garu to give his address to the participants. Over to you, sir.
Thank you very much. Chairmen of Karimnagar, Warangal, and convener of the committee's 2 branches and chapter Nizamabad, and our today's faculty Girish Ahuja, Central Council member Dayaniva Sharma, Regional Council members Naresh Geli, Changal Reddy, and all participants, senior members, junior members. Very good evening to all of you. In this pandemic situation, after 2 years, I am contacting both Warangal, Karimnagar, and Nizamabad members. I am very happy. My wholehearted good wishes, and let us hope new financial year is not starting from April. Now maybe August onwards is going to commence financial year for all us, because all the income tax side is now getting recouped, so that we are going to start our tax audits, individual returns. While I wish all the best, all the members. I hope we are running with the less number of article trainees and few staff, and some members even virtually suffered in the family, he or somebody. So ultimately, we are in more less skills, less energies. I pray Lord Almighty to give us enough strength to equip ourselves professional skills, updation of technology and subject. At the same time, to catch client narrow points where the issues are there to do. Friends, one more point, we are having faceless assessment which has come, so that one way we are saved our time, not tiling ourselves going to the idle offices. Now sitting from our office, we can submit the information required, whatever questions raised by the department. So this is a good feature which Modi government has taken a decision. In this juncture, I want to share not to touching subject. See, particularly I have to say Girish Ahuja, who is the speaker today. Always when I was president, I saw anywhere in the country or world, I used to say Girish Ahuja is walking encyclopedia of income tax. So if this person is there, I think all your doubts will be clarified. Not only your doubts, what are the issues a member faces, what are the issues faces from a client, he identifies and he gives solution. That's why the more apt speaker today, and he enjoys also addressing members. And he is the one person who is not having any ego. He is the person who addresses even 2,000 delegates or 20 delegates. He never feels the number of delegates. He's having a passion to share the subject, to enlighten the all professionals, to have more knowledge. And that way, Sir Girish Ahuja, sir, my wholehearted thanks for you for participating. My states, both states, Telangana and Andhra Pradesh, sir, it is in Telangana, with 3 branches which you are attending. I am having very close fellowship, friendship with all these people, and definitely very nice people, sir. So you are sharing definitely in turn, it reaches to many clients, many regulators to enlighten your thought process. It circulates in different way. Friends, so not touching subject, as I earlier said, let us think our institute is now in the safe hands of our President Nihar Jambu Saria, who is a helm of the affairs in Reliance, having good exposure, so that he is thinking in a better way in corporate side, taxation side, more important points. He is making a discussion point in the council and is representing the Ministry of Corporate Affairs. Friends, same way our Vice President Debashish Mitra, who is from Calcutta, he is also, I seen, he joined. He was having very innovative ideas, thought process.
Sir.
Unmuting.
Sir, Devaraj here. Sir. Unmute change, sir.
Okay.
Yes.
So now the way it is on, so society-wise, both president, vice president are doing, and all council members. See, from our Hyderabad, Dayanivas is there, from Vizag, Prasanna, who are from our state, even Chennai, Rajendra Kumar, FPP, Shekhar, all are doing best, how best we can do. In the process, friends, only my message to all the members, please, this is the opportunity for us. This is why, because pandemic happened, no staff, no articles, how to survive, how to go. Client is not paying much fees. It is only a temporary. Hello? Hello, are you able to hear me?
Yes, sir. Audible.
Audible, sir. Anjaneyulu garu unmute cheyandi.
Hello?
Yes, sir. Audible, sir.
Yes. So,
Sir, audio lost.
okay.
Yes, sir.
See, now everybody feels we are in a very down stage. Maybe this down stage is also a reference. When you want to run forward, you have to take 3-4 steps backward. Same way now in the economy is down, we are having flying colors in future. The reason is the world has become a small global village. Particularly China, nobody is liking. Hello? Hello?
Audible, sir. Audible.
So the way the world now, China has advised. So every economy, every country withdrawing their investment from China, and they're seeing some other new places. There, India is the best place. Indian economy, Indian position, everything is becoming ever. Even if you see, when Prime Minister has taken the government, it was in somewhere 150th position doing ease of business. Now it has become 50th stage. So the way the government is moving forward, the way of changes in corporate, the way of the income tax updation, everything, every country is liking to come to investment in India. So once more flow to India means, so that more opportunities for every chartered accountant. Only our job is we have to update technologically, we have to update professional level skills, we should equip our office properly, we should be ready to take the opportunities or grab the opportunities. Friends, with this, what I want to share, don't shatter yourself. Lord Krishna also in Gita says, Sreyan Sadarmo Ginaha, Sadarma Nidanam Sreya Paradharma Bhayavaha. The line which you have chosen, whatever difficult task, don't leave it, pursue, definitely a day will come. Same thing will happen when we are writing CA examinations. We may fight afraid many times, but we qualified. Same way in this hour of crisis, it is only a simple phase, like cloud when covers sun. Sometime cloud, it will be dark. Again, sun rays will come once cloud. Like that, the small phase, once passes, country will boom like anything. In that role, CS role will be very much high. So only friends, how you equip, how you adapt, how you take challenge, that is the most important. So don't get nervous. Let us go forward. In the process, not only we are benefiting better, we are helping the nation and we are getting good name to the profession. See, always I used to say, success of every man, a woman is there. I always say similar way, success of every businessman, a chartered accountant is there. That saying we should make it 100% true. For that, we should do our job better. Whether fees is given properly or not, that is secondary. We have to do our duty properly so that we can do well. Please, one more thing, we are not getting article trainees. Don't bother. Try to have paid staff and take up your work. Definitely a day will come. We'll achieve best things. With this, I wish all the best because time. So that's why I wish all the best. And it is a good decision. 3 branches, Karimnagar, Warangal, maybe Nizamabad a chapter, but all coming together, making a decision to have this chapter particularly enlights all the members. My special thanks to all committee members and Regional Council member and Dayaniva Sharma, who has helpfully planned properly. And Girish Ahuja sir, once again, greetings to you, sir, and welcome for our reason for addressing. Maybe shortly I will see you at Delhi, sir. Thank you, one and all. Thank you, Aditya. Thank you, Ravi Kumar, Ambarish, and all regional communists. Thank you, one and all. Thank you.
May I request the host to, I'm not able to connect to the video. They have disabled my video. Please,
Yes,
host,
Sure,
you have just disabled my video. I'm not able to do that.
No, sir. It will be done. It will be done. Sir. It will be done.
We will do it, sir. 1 minute. 1 minute.
1 minute.
And also, I'm unable to see anybody. That's why I made my speech. Anyway, just go ahead. Maybe beginning, maybe next meeting.
It's still disabled. Video is still disabled.
Video is disabled. 1 minute. Hari Krishna, sir, మాట్లాడు. Suresh sir.
మాట్లాడతాం,
Okay,
గిరీష్.
done. Now it's okay. It's okay now. Thank you.
Okay, sir. Now it's okay, sir. Thank you,
Good
sir.
evening, everyone. Honorable past president of the Institute of Chartered Accountant of India. I've seen him after a very, very long time. After a very long time, CA Devaraj Reddy ji, Central Council member, the sitting president colonel, Shri CA Dayaneva Sharma ji, Changal Reddy ji, the regional council member, of course, Naresh Chandra Gilli ji,
Sir.
chairman of the Warangal branch, Ravi Kumar, chairman of the
Sir,
what is this? Karimnagar branch, Mukka Abidar, the convener of the Nizamabad branch, Abhishek Chaudhary, the other dignitaries sitting in front of me, ladies and gentlemen.
sir.
Let me tell you, sir.
A small submission, sir. Sir,
Yeah.
a small submission, sir.
Small,
Please.
sir.
Please
Now we-
give us a chance to introduce to the participants, sir. Please.
Okay, sir. As you wish.
Yeah, Aditya, please go ahead.
No,
Aditya.
no, sir. Certificate presentation is there, sir.
Yeah, certificate. You please give certificate first to the chief guest, then
Yes, sir.
introduce our speaker.
Yes, sir. Sorry for the interruption, sir.
Sorry.
Thank you, sir. Thank you, Devaraj Reddy garu.
This with the video problem. Chali, continue, please continue.
Sir, now I request CA Central Council member, Dayaneva Sharma, sir, to give a formal e-certificate, participation token of gratitude to the today's chief guest, our past president, CA Devaraj Reddy garu. Dayaneva, sir. Now I request as a sir.
Thank you very much. Thank you.
Thank you, sir. Thank you, sir. Thank you, sir.
Thank you very much.
అప్పట్లో లేవు.
Now I request CA Aditya Mukka, Chairman of Karimnagar branch, to introduce formally our today's speaker, CA Girish Ahuja garu. Over to you, Aditya garu.
Thank you, Hari Krishna garu, Secretary of Warangal branch. On behalf of Karimnagar branch, I welcome today's distinguished chief guest, CA M. Devaraj Reddy garu, past president of our institute, guest of honor and Central Council member Dayaneva Sharma garu, and today's high-profile speaker, one of the reputed and respected personality of our country in the field of direct taxes, CA Dr. Girish Ahuja sir, Chairman of SICASA of SIRC, Naresh Gilli garu, and Regional Council member Changal Reddy garu, and all the members, participants. A very warm welcome. And thank you, Speaker sir, for honoring us with your presence. Girish Ahuja sir needs no introduction, but as a matter of protocol, I have been assigned the task of introducing the guru of all tax gurus, and it is a privilege for me introducing Girish Ahuja sir. Sir holds a degree in BCom Honors from Sri Ram College of Commerce, Delhi University. Sir has done his post-graduation from Sri Ram College of Commerce, Delhi University in the year 1967. He cleared his chartered accountancy exam in the year 1970 and was rank holder both in the intermediate and final examination of the Institute of Chartered Accountants of India. He received his PhD degree from Faculty of Management Studies, Delhi University in the year 2009. At the age of 63, we can understand his passion for learning. Sir practices mainly in the field of direct taxes. He was nominated by the Government of India as a member of the task force for redrafting the Income Tax Act and the new income tax law, and the report thereto was submitted to the Finance Minister on 18th August 2019. Sir was nominated by the Government of India as Independent Director to the Central Board of Directors of State Bank of India for 2 terms. nominated by the government with the approval of the Supreme Court to Board of Directors of Unitech Limited. Sir is appointed as an independent director on the board of Ruchi Soya Industries Limited, one of the concerns of Patanjali Group. Appointed as an independent director of other 3 listed companies. Nominated member of the High Powered Committee constituted by Government of India under the chairmanship of Justice A.P. Shah, Chairman Law Commission, to look into issues of applicability of MAT provisions in the case of foreign companies and foreign institutional investors. Second, any other issue relating to applicability of direct tax provisions which may be referred to it by the government CBDT from time to time. Sir authored over 25 books on direct taxes, both for students and professionals, including a concise commentary on direct taxes, compendium of issues on income tax and wealth tax, direct tax ready reckoner, direct taxes law and practice, guide to TDS, taxation of capital gains. Sir is a consultant on tax matters to various industries and non-profit making organizations. He delivered more than 3,800 lectures on various topics of direct taxes organized by our CA Institute, ICSI, Chambers of Commerce, Management Institutes, and various other organizations. These lectures have been delivered on honorary basis to educate the members of these institutions. Sir is a patron of Tax Law Educate Society, a non-profit making voluntary organization with the main objective of educating general public and professionals on taxation, law, and allied matters for last 10 years. Sir is the president of Sriram College of Commerce Alumni Association for over 30 years. And with this brief introduction, I request our esteemed speaker to address the enthusiastic members. Sir, we wish to have your blessing, sir. Thank you very much, sir.
Good evening to everyone. The Honorable Past President of the Institute of Chartered Accountants of India, C.A. Devaraj Reddy ji, Central Council member from Hyderabad, of course, Dayanavas Sharma ji, Naresh Chandra Gilli ji, Regional Council member, of course, Changal Reddy ji, both are Regional Council member, of course, then Ravi Kumar Warangal, Chairman of the Warangal branch, Ravi Kumar ji, R. Krishnan ji, Chairman of the Karimnagar branch, Aditya Mukta ji, Secretary of the Karimnagar branch, Tota Anjamanioli ji, the Chandra ji, convener of the Nizamabad branch, ladies and gentlemen. Well, friend, let me tell you, the new concept of section 45.4 in the post 9b is a very complicated concept. What was and a change, they made a mess of it. What happened earlier? There was section 45.4 under the Income Tax Act prior to this amendment brought. Please note, amendment has been brought with effect from assessment year 21-22 to 21-22 and not 22-23. It has been made applicable right when the law came. It has assessment year 21-22 and not what was 44 earlier. 45.4 used to say whenever there is.
Your voice is breaking, sir. Sir.
Asset at the time of dissolution or otherwise of a firm or AOP. At that time, there will be a capital gain in the hands of the the firm or AOP, and for purpose of computing capital gain, we should fair market value of that asset which has been given to the partner. The question, what problem was there? First, it was written dissolution or otherwise. The biggest dispute was, is it only for dissolution or is it for reconstitution also, like retirement, etc.? There was only one judgment of Bombay High Court, A&I, which said even reconstitution will also be covered under section 45.4. Other high court said nothing doing. The otherwise should take color from dissolution, and therefore it is only dissolution which will be covered and retirement, etc., will not be covered under 45(4). This was one dispute. And second dispute was the major dispute. The written word was where there is a transfer of any capital asset of dissolution. Question was, they say firm and partners are same. Transfer asset to yourself. The word transfer is not a correct answer because although income tax says firm is separate, but legally the now what have they done? This bill was presented. Let me tell you, at that particular time of passing of the finance bill, that means Finance Act. May I request all of you, at least 10, 5, 7 people should be in front of me. Only one man in front of me. I cannot talk to the walls. I can't see only the image of the people. I want some people have their video on and let me talk to them so that I know to whom I'm talking to. I only have one video in front of me, Amrish, because of he is from Nizamabad. He is there.
Sir.
The other gentlemen are not there. Now Hari Kumar ji also, Hari Krishna ji, the secretary has come. Devanaraji, I have no problem with. I want these people to understand. If they are in front of me, I'll be able to talk to them. Now Aditya is also there.
Yeah, one second, sir. One second.
I can read the face of the people. I can read their movement of the head so that I know whether they are following or they are not following. Hari Krishna is moving the head. Pardon me?
One quick thing, sir. Request every member who is attending the program, if they can keep the videos on, because we have a guru of gurus in the direct tax and we have to give that, respect.
The problem of that. Hari Krishna is very.
Yes, sir.
Avrish is with me. 1 or 2 more, nothing more, not more than that. 1 or 2 more. Why I'm telling you is that I am able to see the face and I know whether they are following or whether they are not following or if they have any question. And one more, I request the host, if you want any question to be answered, don't wait the session to be over. You can keep on asking the question. You can keep on asking the question because the people will understand more if they ask the question there and then it is clarified. So please don't hesitate to ask question. If any question comes and if I have covered that topic, you are most welcome to ask me. Now I'm coming back. So what happened is, due to these litigation, but they brought section 45(4) and 44(a), but at the time of passing of the act, they moved certain government amendment and 45(4)(a) was dropped. Language of the 45(4) was changed and new section 9b was inserted. So let me tell you, this 9b was inserted at the time of passing of the bill. Section 45 was also changed, 45(4)(a) was dropped. So if somebody has read the bill, it will be something different. And if you read now act, it is something different. Coming to now, please try to understand. I am trying to make it simple, otherwise it's most complicated. One section introduced was section 9b. What is the language of 9b? Before I talk to you the language of 9b, I am introducing 3 terms with you. One is specified person. Another term is specified entity. And third term is reconstitution. Try to understand. In the old section 45(4), they used to use the word partner of a firm, member of AOP. To avoid to keep on talking about partner of a firm and member of AOP, they have used the word specified person. They've used the word in 9b, specified person. But meaning of the specified person is the partner of a firm or member of AOP. But we are not using again and again partner of a firm or a member of AOP. I am going to use the word specified person. That is what they have done. Second is specified entity. Entity is a firm or AOP or BOI, whether incorporated or not. Instead of using again and again a firm or member of AOP, they have used the word specified entity. Understand, sir? One is specified person, another is specified entity. Third terminology, I'm going to use it, reconstitution of a specified entity. I'm not using the word dissolution. Everybody knows what is dissolution, but I'm talking about reconstitution. They have said reconstitution means when some partners is admitted into the partnership firm, there is a reconstitution. There is a partner we retire, and a partner retires. Whenever a partner retires, it will be treated as reconstitution. Number one, whenever a partner retires, it will be treated as reconstitution. Number two, some partner retire, some are admitted. So that will also be treated as reconstitution. Number three, no partner retires, no partner is admitted, but there is a profit sharing ratio which has been changed. This is also will be called as reconstitution. Understood, sir? Reconstitution include three things: retirement of a specified person. Number two, retirement of specified person and admission also in that specified entity. Third, only profit sharing ratio is changed and it amounts to reconstitution. Clear, sir? Now I'm coming to section 9b. Try to understand each and every word. Where a specified person, you know meaning of specified person, partner or member of your, receives any stock in trade or capital asset in the previous year from the specified entity. What I'm trying to explain, what is happening? A specified person receives stock in trade or capital asset. Please remember, inventory or capital asset during the previous year from the specified entity. Now, next word, in connection with dissolution or reconstitution of the entity. Are you agreeing my point? So what is the occasion? There is a dissolution or reconstitution. In section 9b, both words are used. In connection with dissolution or reconstitution, what are you getting? The specified person is getting any stock in trade or capital asset during the previous year. From where he is getting? From the specified entity. The word is receives, not transfer. Receives from the specified entity in connection with any dissolution or retirement. Such transaction shall be treated as deemed to be transferred in the hands of the specified entity. This will be called deemed to be transferred. Although there is actual transfer is not there. We are treating it deemed transfer. Received by a partner. That's it. Received by a partner from a firm. What did you receive? Any stock in trade or any capital asset during the previous year. In connection with that, in connection with dissolution or reconstitution, you have received two things: stock in trade or capital asset or both. Right, sir? Right, sir? You have received that. It will be such a transaction will be treated as deemed transfer in the hands of the specified entity. Next point says, such deemed transfer shall be deemed to be income chargeable to income tax. Such a deemed transfer, the profit or gain from such deemed transfer shall be deemed to be income chargeable under the Income Tax Act, number 1, as per profit or gain from business or profession in connection with stock in trade. And number 2, and if it is a capital asset, taxable under the head capital gain. And for the purpose of computing profit or gain, we will have to take the fair market value of that stock in trade or the fair market value of that capital asset. Try to understand. Please try to understand. Section 9B is not talking about under which head it will be. It is not taxing this. It is saying it is a deemed transfer and deemed income chargeable to tax. But where will it be chargeable? If it is given stock in trade, chargeable under business income. If you have given capital asset, chargeable under capital gain. If you have given both, so stock in trade chargeable under business income and capital asset chargeable under capital gain, section 45(1). Clear, sir? Clear, sir. But when you are going to charge the tax under section 28 or 45, as the case may be, you will have to take the fair market value. Have you understood, sir? Now I'm taking an example. Try to understand with the help of an example. I'm taking an example of only dissolution. Reconstitution I take later. Suppose there is a dissolution of the firm and partner A at the time of dissolution gets 2 things from the firm. 1, stock in trade. The stock in trade which he has received, its cost is 3 lakh. Okay, sir? Cost is 3 lakh. I'm writing the figure. The cost is 3 lakh and the market value is 3,50,000 of that inventory. Inventory. Market value is 3,50,000. Second thing which he has received is, let's say, non-depreciable asset, land. Land. Whose cost is, let's say, 25 lakh. Cost is 25 lakh. And the stamp duty value of that land, let's say, is 1 crore. 1 crore. Right, sir? The firm has given inventory costing rupees 23 lakh for and market value 350. The firm has given land cost 25 lakh, stamp duty value 1 crore. Right, sir? Law says it is a deemed transfer as per 9B. Deemed transfer. Number 2, profit or gain from such deemed transfer shall be chargeable to income tax. This is number 2. But where will it be chargeable? Not under 9B, under respective head. That is, one under business head, the another is under capital gain. Correct? But when you calculate the income, profit, you will have to take the fair market value. So let us come to now dissolution. Go to the business income chapter 28 section. Market value 3,50,000. Cost of the inventory 3 lakh. Short, what you call business income 50,000. Correct, sir? Profit or gain under that business 50,000. Correct? Yes. Agreed? Yes. Now let us go to capital gain. Section 45(1). Sir, consideration price is the stamp duty value 1 crore. Am I right? 1 crore. Now, cost of the land is 25 lakh. Am I right? We will have to index it. We will have to index it. Obviously, because it is, if it is long term, we will have to index it. Suppose indexed cost of that land is 40 lakh. Please note the word 40 lakh. So how much is the capital gain? 1 crore minus 40 lakh, index cost 60 lakh. Correct, sir? Correct. So now under section 28, firm will be liable to pay income tax on profit or gain from business and profession amounting to rupees 50,000. Agreed? 50,000. Secondly, firm will also be liable to pay tax long-term capital gain under section 45(1), 1 crore minus index cost. I'm assuming index cost from 25 raised to 40 lakh. So by 1 crore minus 40 lakh, 60 lakh. Clear, sir? Clear, sir? 9B is over. 9B is over. Not only 9B, section 28 and 45(1) also over, and it is dissolution. It is no other section. 45(4) will not be attracted. 45(4) will be attracted only when there is reconstitution. I have not talked about reconstitution at this stage. I'll be talking about reconstitution at a little later. Clear, sir? Is it clear? Clear? 9B, read with section 28, read with section 45. No question of 45(4). In case of dissolution, only one place, 9B read with 28 and read with 45. Clear, sir? Clear? I am not stopping here. 9B I will take again. 9B I will take it again. I'm going to now section 45(4). I'm going to now section 45(4). I'm telling you the language of section 45(4). Notwithstanding anything contained under 45(1). 45(1) is how do you calculate capital gain on the transfer of capital asset. They said notwithstanding anything contained under 45(1). Now, comma, where a specified person receives any money or capital asset or both, money or capital asset or both, from the specific, in the previous year, from the specified entity in connection with reconstitution of the entity, in connection with reconstitution. Here, dissolution is not there, sir. Reconstitution of the specified entity. Such a thing will be deemed to be transfer, and the firm will be, the entity will be liable to pay tax under section 45(4). They will be liable to pay tax under 45(4), which will be calculated as under. How would you calculate 45(4) capital gain? It will be A is equal to B plus C minus D. Are you getting my formula? A is equal to B plus C minus D. A means capital gain, which can be short term or long term. A means capital gain, which can be short term. Let's say there is long term capital. A is equal to B. B is value of money which you have received at the time of dissolution. Let us say, now I'm taking another example. Let us say I received 30 lakh as money. The partner who retired, A, received 30 lakh as money. And he has also received land whose cost is 25 lakh. Fair market value 1 crore. He received that land at the time of dissolution. At the time of retirement. 25 lakh cost and 1 crore is what? 1 crore is what? Stamp duty.
Market value.
Correct, sir? Correct. I will stop here. First, I will go to 9B. I will stop here. I'll go to 9B. 9B also includes dissolution. Agreed, sir? Retirement. 9B includes retirement. Now, what have you received at the time of retirement? Money. 9B does not talk about money. So forget about that money part. Does 9B talk about money? No. 9B talks about only stock in trade as well as capital asset. It doesn't talk about money. So forget about money. So under 9B, you have received capital asset. Land. What is the cost of capital asset? 25 lakh. What is the stamp duty value? 1 crore. Calculate the index cost. Let us say index cost is 40 lakh. Index is 40. So 1 crore minus 40 lakh, 60 lakh will be taxable under section 45(1). Read with the rule, read with section 9B. Agreed, sir? Read with 9B for 60 lakh. No question of stock in trade. No question of stock in trade because stock in, or let us take stock in trade. Let us Let us calculate stock in trade here, but I don't want to. No question of any stock in trade. Correct, sir? So tax on 60 lakh you have paid. Let us assume without surcharge, the tax rate is 20%. Sir, how much is the tax? 12 lakh on 60 lakh. Correct, sir? Correct, sir? 12 lakh. Who will pay this tax? 12 lakh. Firm will pay tax 12 lakh on the capital gain of 60 lakh as per section 45(1), read with section 9B, read with section 112, the rate of income tax 20% on capital gain. 12 lakh, done, sir? Done? So 9B is over. Now come back. A says, A 45(4), A capital gain is equal to B. B is money. How much money? 30 lakh. C is equal to capital asset, value of capital asset. How much the value of capital asset? 1 crore. So 30 lakh plus 1 crore, 1 crore 30 lakh. Right, sir? Minus the capital outstanding. I have not given you capital outstanding. Minus the capital outstanding. Now wait. Let us say the capital of A was 70 lakh before this retirement. 70 lakh. Correct, sir? 70 lakh. But wait, this 70 lakh does not include profit which is taxable under 45(1). And read with this. Now you have given asset to partner. What is your profit? Not as per income tax act. Income tax, you have calculated profit 1 crore minus 40 lakh, 60 lakh. But as per accountancy, the profit on sale of asset is not 60 lakh. The profit on sale of asset is 1 crore minus 25 lakh, 75 lakh. Am I right? 75 lakh. 75 lakh. This 75 lakh minus the tax which you have paid. The tax which you paid is 12 lakh. 63 lakh will be distributed amongst the partner in the ratio of their profit sharing ratio. Are you getting my point? This is the most difficult point I want to tell you. I want to know what is the capital outstanding. His capital before this profit is 75 lakh. 70 lakh. I said 70 lakh. So let us calculate what is the profit on the sale of this asset. On this profit which on the sale of this asset to the partner. How much is the profit? We will not calculate capital gain. Capital gain is only for income tax purposes. For accountancy purposes, the profit on the sale of asset is sale price 1 crore, cost 25 lakh, 75 lakh. Agreed, sir? 75 lakh. How much tax has been paid on that? 12 lakhs. 12 lakh. Agreed? Balance 63 lakh to be distributed amongst the partner in the profit sharing ratio. Suppose my profit ratio is 1/3. So 63 divided by 1/3, 21 lakh. Am I right, sir? So what is my capital outstanding? 91 lakh. 70 lakh plus 21 lakh profit on sale of asset, 91 lakh. Sir, correct? 91 lakh. Correct, sir? Now A is equal to B. B is 30 lakh plus value of the asset 1 crore. 1 crore 30 lakh minus 91 lakh. 39 lakh is the capital gain taxable under section 45(4). Is this clear or not clear? Is this clear or not clear? I repeat again. Well, A, I have to calculate. B, money 30 lakh. C, asset given land 1 crore. 1 crore 30 lakh minus capital outstanding. How much the capital outstanding? Before this 70 plus profit on sale of asset after tax is 21 lakhs. You are clear? 21 lakh. So 70 plus 21, 91. So 130 minus 91, 39 lakh will be chargeable to income tax under the head section 45(4) as long-term capital gain. Clear? Clear? I have this 39 lakh I'm keeping in my mind, but I have already done 2 transactions. One transaction, section 9B read with 45(1). I've already charged that money as tax is 60 lakh. And on that 60 lakh, tax paid is 12 lakh. Correct? Second transaction, 45(4). 45(4) transaction, I told you, is a capital gain. A is equal to, A will be 39 lakh, which is equal to B. B is 30 lakh plus value of the asset 1 crore minus the capital 91 lakh, 39 lakh will be taxable under 45(4). What will happen to this 39 lakh? I'll tell you later. I invite question beforehand, if you have been able to follow, before I take up what is the position of that 39 lakh for which you have paid tax. Correct? Tell me now. Tell me questions. I can give you other examples also, but first let us complete this and then I'll take the other examples.
The amount referred in section 45(4), 39 lakhs, is taxable in the hands of the partners.
No, it is taxable in the hands of the firm.
Firm. So firm
Both
is
are taxable in the hands of the firm. Both. 9B read with that, firm.
45.
Even 45(4) taxable in the hands of the firm. Not in the hands of the partner. In the hands of the firm. Is this clear? In the hands of the firm. One. Any other question? Keep asking. I'll make it more complicated, but first this should be understood.
Sir, for the benefit, can I read down the questions which are given in the chat box?
I want you to ask them.
Sir, there's one question which says, what is there any tax impact in the hands of the partner?
No impact. Rather, partner got land. His cost of acquisition for future purposes will be 1 crore.
Right.
1 crore. He got business inventory. The cost is whatever the value, market value. No, nothing in the end. Whatever he received, the cost will be 1 crore because he received the asset. The firm has already paid tax on the basis of 1 crore. And
Sir,
now this land, if he wants to sell in a future year, his cost will be 1 crore.
Sir, CA Ramdev
The date of acquisition will be the date of retirement when he received this asset.
So CA Ramdev Putra asks, what about section 10(2)(a) exemption to partners?
Sir, what presumption? Share of profit? Share of profit? You are talking about share of profit is exempt to the partner. I'm not talking about share of profit. I'm talking about what is the capital outstanding. In the capital outstanding, what did I do? I said capital outstanding means before retirement was what is your capital? After for tax purposes, but for business income, for profit, it is not. For accountancy, the profit is not 60 lakh. The profit is 1 crore minus 25 lakh. The stock. So the cost 75 lakh. 5 lakh profit should have been credited to the partner's capital account. Agreed now? But there is a tax implication of 12 lakh. So I said net profit 75 minus 12, 63, apportioned between the partners in the profit sharing ratio. Suppose my ratio is 1/3. So 63 divided by 1/3, I'll get 21 lakh. So my capital outstanding is not, I took 70 lakh, but 70 plus 21. The profit 1 crore 1 lakh. Sorry, 91 lakhs. 91 lakh. Therefore, I calculated the capital gain 1 crore 30 lakh minus 91 lakh 39 lakhs.
Sir, one more question is, what if the consideration is paid only in cash? There is no involvement of any capital asset. Is there any requirement to
Same. Wait. A is equal to B. B, let us say you have paid him 1 crore. B. Agreed, sir? B. Minus C. What is C? You have given him only cash and nothing else. If there is only cash, nothing else, 9B is not applicable. If only cash and no, and 9B is not applicable. Agreed?
Yes.
9B, I'm talking about what you call retirement. I'm not talking about dissolution. If you have given only cash, 9B not applicable. Let us come to 45.4. What have you done? Since 9B is not there, there is no gain. There is no gain there. So what is this? A is equal to B. B is value of money. Whatever you got it. Minus C. C is your capital outstanding. The rest is the capital gain. If you receive only money, and let's say your capital is 70 lakh and you have been given 1 crore 10 lakh. Did you get any asset? No. Then why did you get 1 crore 10 lakh? The difference between 1 crore 10 lakh and 70 lakh, 40 lakh will be subject to capital. Why did you get more than what is your capital? That means there is a gain. Gain you might have calculated on the basis of valuation of your existing asset.
Sure.
Maybe you have not done it, but it is. Why are you giving more to the partner? Either it is in the goodwill, or it is the valuation of some asset has gone up. So you are giving. Why should he get more than 70 lakh when its capital is 70?
Right.
Why? What is the reason of giving 1 crore 10 lakh to him? The reason could be that you have given the value of goodwill to him. Reason could be some asset value has gone up because of revaluation. If you do the present value is more than the purchase price, so you have given me more amount. So that more amount is liable to capital gain.
Right.
Correct?
Right.
Correct. But no, section 9 not applicable. Section 9 not applicable. Section 45(1) not applicable. Only 45(4)
is applicable.
Only 45(4). Wait, another question. I give you. His capital is 70 lakh and he retires. I give him 70 lakh in money. What will happen?
There's no liability.
9B not taxable. Even 45(4) not taxable.
Yes.
Because I have given to an equal amount.
Right.
If he retires and take away only capital, and that too in money, nothing happens. Nothing happens. That too in money. If I give him more than what is his capital, then thing will happen. Then thing will happen. Agreed? Agreed. If I retire and whatever my capital was there, I have been given that capital, thank you very much, nothing will happen. Another point. If there is a reconstitution, nobody has retired, only profit sharing changed. And after changing the profit sharing, nothing has been paid to any partner. Nothing has been paid to any partner. 45(4) not applicable. 45(4) not applicable. Because 45(4) says it will be applicable only when a partner receives money or capital asset. But you have not given anything to him. Nothing will be. There is a profit sharing ratio changes, but you have not compensated any partner with any money or capital asset. It's only profit sharing change. Thank you very much. We are not saying anything to you.
Sir.
Are you understanding? Sir, many questions are there. You will have to apply your mind. It is not that simple section. You have to apply your mind again and again.
Sir, sir.
Another point.
One more question, sir. There are 3 partners in a partnership firm having immovable properties, but only one partner out of which is retiring and who is without just given the original amount outstanding as his capital. So what is the...
Has he been given any asset?
No, sir. No, sir.
The matter is over. There is no, when he has not been given asset or any stock in trade, 9B is not applicable.
Sir.
45(4) says A is equal to B. B is the money minus plus C. C you have not given anything.
Sir.
Minus D, the same amount you have given. So where is the capital gain?
There is no question.
His capital was 70 lakh. You have given him 70 lakh at the time of retirement. Thank you very much. Where is the capital gain? 45(4) is not applicable. Even 9B is not applicable because I have not given any asset to him. 9B is also not applicable. I have not given any asset to him.
Sir,
Clear?
one more question, sir. One viewer is asking, what about the consequences on the death of a partner?
Death of a partner, if there are only two partners, and if there is a death, it is a dissolution.
Sure.
If there are more than two partners,
Sure.
if there is a death, we will see the partnership deed. In a partnership deed, sometimes they say, even if there is a death, the partner will continue. More than two. If there are only two, one dies, firm doesn't have two
Resolution.
partners.
Yes.
If there are more than two and one of the partner dies, we will see the deed. If the deed says, even if there is a death, the firm will continue with the remaining partner, or firm will take a legal heir also, then there is no problem. It is not a case of dissolution. It is a case of reconstitution. Dissolution will be there only when that partnership deed does not indicate anything and there is a death. Now, two cases. One, partnership doesn't talk about anything. There is a dissolution. More than two partners also. It is dissolution. Only two partners. Otherwise, dissolution. If one dies. If one dies. But many of the partnership deed contains a clause that in the event of the death of one of the partners, if there are more than two partners, even if the date of death of one of the partners, the firm will continue, whether with the remaining partner or by taking the legal heir of the partner also as the partner. So in that case, we will not call it dissolution, we will call it reconstitution. Clear, sir?
Yes, sir. Yes, sir.
Clear, sir? Because one has gone, the remaining heir there, or you have admitted one. Clear? 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 I am again repeating, dissolution, if there are only two, even if you write no dissolution, if there is a dissolution, we will take the legal heir as a partner of the disease. Even if you write, it is a dissolution. Why? There are only two and one of them has gone. The second, you are taking under the law to him, but it is case of dissolution. But we have already more than two, let's say 3, 4, and we have written a clause in the deed that if any event of a death of a partner, the remaining partner will continue the firm. It is not a case of dissolution. Or remaining partner will take also one legal heir of the disease, that there is no question of any dissolution. But if there are only two, even if you write that we will take legal heir, it will be a case of dissolution if the death takes place. If the death takes place. Clear? Clear? I'm trying to make it as simple as I can, but it is most difficult law which has been made. Clear so far?
Yes, sir.
Ask questions.
One more question, sir. One person says, in the 39 lakhs calculation, why this indexed cost is coming into picture?
Index is not coming into picture.
No,
39 index is not coming.
He is referring to that 100 minus 60.
I am taking 100 minus
100
45.
minus 40 part. Yeah. So that 40 is the indexed cost.
Sir, accountancy does not talk about indexation.
Sir.
In accountancy, profit on the sale of asset will be 75. For income tax, it will be 60.
Right.
Sir, we are mixing up two things. One is capital gain as per income tax. Another is profit as per accountancy. In accountancy, where is the question of indexation? 100 minus 25, 75 is the profit. Yes, that profit has to be distributed. But at the same time on that, you have given tax. You have not given tax on 75. You have given tax on 60. Am I right?
Yes, sir.
So that 12, 75 minus 12, 63 divided amongst 3, 1/3, 1/3, 1/3. So it goes to 21
lakhs. Right.
Correct?
Yes, sir.
Sir, I have figure here. You must write down and understand it. I'm going to make it more complicated. Wait and watch. But first you should understand this. Then only you will be able to further go and understand the thing.
Sir.
Any other question? Keep on asking.
This Finance Act 2021 says the sections are applicable for the financial year 2020-21. Then why this 9B and 45 for applicable for the assessment year 21-22?
Why, Newta? There is no why in law. They have made an amendment for this section 45(4) and 9B with effect from 1/4/21, not 1/4/22. So 1/4/21 means assessment year 21-22. Mostly the amendments are for assessment year 22-23. So they write 1/4/22. But here they have written it is applicable with immediate effect. That is, you might have done the transaction before the budget is passed. That is also applicable. That is also applicable. You might have done, because the budget was passed in the month of March. And you might have done it much before the bill was presented. Let's say in the month of January, December, and budget was presented in first week of February. Still you are liable to pay. I'm really surprised what kind of a law. They said you may not do planning. If they would have done it from 1/4/22, you could have done planning and you would have retired by 31st March 21. Many people must have retired. Agreed? So that's why they did not give you any chance of doing any planning. They said, whatever you have done, it is applicable. Correct?
Sir. Sir, one more question is.
हमारे में एक हिंदी में बोलते हैं दिल है नहीं मानता. इनका दिल नहीं मान रहा है. ये क्या हो रहा है? What is this happening? But you will have to accept it. You will have to accept it. हाँ, बोलिए, please tell me.
One more query. Circular number 14 is not clear. Sir, what is your take on circular?
Yes, sir, I have not talked about 14 now. I will be, other 14 I have told you. This is circular number 14 which I am talking about.
Right.
This is circular number 14 which I have talked about, which is not clear. He said open, this is the same thing I have given. They have given a different example. I have given a different example. But this is only attribution is not done so far. I have talked to you circular number 14, but what is left is, what about this capital gain which I have paid a tax on under 45(4), how much? 39 lakh. I have paid tax on 39 lakh. I have paid tax under 45(1) also. Now you want me to 39 lakh. What will be 13? How will I get the benefit of this 39 lakh? They say this 39 lakh will be allocated, attributed to the other assets for future purposes. Section 48 clause 3I says that whatever capital gain you have earned under section 45(4). How much capital gain under 45(4)? 39 lakh.
39 lakhs.
That 39 lakh will be allocated, will be attributed to the remaining assets of the firm. How will that be attributed? That is given in rule 8AB. 8AB. I have not talked about that rule, but is this so far clear? I said, first you must understand this. What will be the treatment of 39 lakh tax which is paid? 13 lakh capital gain computed under what? Under section 45(4). That 39 lakh, because you have paid a tax on that, that 39 lakh will be taken as part of the cost of the remaining asset. How would you distribute that 39 lakh? Now I'm coming to that. Try to understand, let him tell you how many assets you are left with. Suppose you have asset with 2 land left with you. What is the value of that asset? Not the value. Calculate the market value of those assets. Suppose I have 2 more land, B and C. The cost of the land is 40 lakh each. Let's say the market value of those land as per reported, as per certificate of registered valuer, both are 70 lakh. Now what will you do? This 39 lakh will be distributed to the remaining asset in the ratio of their present value. Present revalue as a body, revalue. Us ratio. You will try to distribute in that ratio. So what is the ratio of the remaining asset? For remaining asset should be revalued. And then take the proportionate. And this 39 lakh into asset number B divided by the total revaluation. Then 39 lakh into asset C divided by the total revaluation amount. That will be revalued, and this amount which have you calculated whenever you sell in future will be reduced from the consideration price. Suppose that 39 lakh has been distributed between the other asset, let's say 39 lakh, 20 lakh and 19 lakh. Let's say 20 lakh to asset B, 19 lakh to asset C. Whenever you sell asset B in future, you will deduct from consideration price 20 lakh rupees. Whenever you sell asset C in future, you will deduct from the consideration price 19 lakh. And rule 8AB says you will have to file all these details in form number 2. What number is that? 5C. Form number 5C. That details have to be filed in form number 5C. This is what is given in notification, which I told you, which has come in the notification. What rule 8AB? Rule 8AB says that you have to file along with that a form number. What is the form number? 5C. 5C. 5C.
Notification number 7.
Sir, so much of complication. That 39 lakh will have to be allocated to the remaining asset, attributed to the remaining asset. When you are attributing to the remaining asset, please revalue those assets. And if they are long-term capital asset or short-term, will also make a difference. Revalue those assets. Suppose you revalued those assets and then you have distributed this 39 lakh on the basis of ratio of those assets, revalued ratio of those assets. Suppose I have two assets long-term. The cost of the one asset was 30 lakh. The cost of the another asset was 20 lakh. Right, sir? Remaining asset. I revalue that. In the revalue, the first asset whose cost was 30 has come to 50. And the second asset cost is 20 has come to 25. So what is the ratio? 2:1. So this 39 will be allocated to 2:1. 2:1. 26 lakh will be for one asset, 30 lakh will be for other asset. And this 20 lakh will be deductible at the time of sale from the consideration price, 26 lakh of the sale of that asset. And the second asset, 30 lakh. You'll go mad. You will go mad.
Sir, one more question here, sir. What will happen to these 39 lakhs if there is no asset left? There is no other asset when this is...
Sir, that means if there is no asset, so where is the firm left? Firm will have some asset. Some will have some asset. What will the firm have? Some depreciable asset, some goodwill. It might have created a goodwill for that amount. It might have created a goodwill, revalued that asset is goodwill. So that 39 lakh goodwill will be goodwill is a fictitious asset. So that 39 lakh, when you sell 39 lakh by 13 lakh 0, then you will become 0. And you have to create, sir, you have to allocate to the, there is no existing asset, only this asset. That means you have paid goodwill for that or you have done for that. And if that was the only asset, then there is no need of allocation. There is no need of allocation because that asset is already gone. Where is the need of allocation then? They have given that rule 8AB. In rule 8AB, there are 3 points. One, you have existing asset. One, there was only this asset, so no treatment. If there was only this asset, no treatment. Or if there was other asset, short term, then it will be allocated to them, the short term asset in that. Sir, it is not that easy, sir. It is not that easy. And I am not in the habit of giving presentation. This is the only difficulty with me. Whatever speak, I speak from here. So presentation, let them see once again, rule 8AB, given the notification which had come, you will have to read that notification which came on 2nd July. The notification came on 2nd July, if you remember, and that guidelines also came on 2nd July. The notification was 76 by 2021. Notification 76 by 2021 dated 2nd July. They have given you one, and they have also given you circular number 14 by 2021 dated 2nd July. They have given certain examples in the circular. Those examples are so simple that it is still very difficult to understand. Let me take an example very difficult. Try to understand. Now write down that example. I will think of that example and give it to you. Suppose partner A retires. So please note, 45(4)(b) will come into picture, 45(4) only when there is a retirement, reconstitution, and not at the time of dissolution. You know that. So I'm taking 45(4) as well as 9(b). Okay. There is a partner A who has retired. He has been given three things. One, stock, cost 2 lakh, market value 2,40,000. Please write down, all of you.
Yes, sir. Yes, sir.
Stock cost 2 lakh, market value 2,40,000. Correct, sir? Second, money, rupees 10 lakh. Third, land, cost 25 lakh, index value 40 lakh, stamp duty value 1 crore. Please write these figures. I repeat, Mr. A retires from the firm. He has been given three things. One, stock, another land, third, money. Stock cost 2 lakh, market value 240. Correct, sir?
Yes, sir.
Second, money 10
About
lakh.
10 lakhs.
Third, land cost 25 lakh, index cost 40 lakh, stamp duty value 1 crore. Capital outstanding. Please note the word capital outstanding before the retirement. Before retirement is let's say 60 lakh. Right, sir?
Right, sir.
Now, forget about 45(4). Let us come to 9(b) first.
Sir.
Correct, sir?
Yes, sir.
9(b) read with 28. Stop. So business income
40,000.
40,000. Very good. Capital gain 1 crore minus 40 lakh, 60 lakh. Agreed?
Yes, sir.
Agreed?
Yes, sir.
Yes, sir.
60 lakh. Assume tax 12 lakh.
Yes, sir.
Okay, sir? 20% without surcharge. Correct?
Hmm.
Third, money. No, nothing will be taken money here. Money will not be taken here because 9(b). So two tax. One is tax on what you call 40,000 as business income. Let us say tax on 40,000 is 12,000.
Right.
Why I'm saying? Because I have to calculate capital outstanding.
Yes, sir.
Right, sir? 40,000.
Yes, sir.
Tax is 12,000.
Yes, sir.
Second is capital gain 60 lakh, tax 12 lakh.
12 lakhs.
Correct, sir?
Right, sir.
So I have completed 9(b), read with 28 and 45(1).
Yes, sir.
Two taxes I have paid. One I have paid on business income 40,000 at the rate of 30%, 12,000.
Yes.
I paid on capital gain long term 1 crore minus 40 lakh, 60 lakh, 20%, 12 lakh.
12 lakhs.
Correct, sir?
Yes, sir.
This chapter is over. Let us come to 45(4).
Sir.
Now, A is equal to B. What is B? 10 lakh.
B is 10
B
lakhs.
is what? 10 lakh. What is how did you calculate 10 lakh? Money.
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 Yes, sir.
Plus 1 crore.
C.
Right? And
Yes.
land.
Yes, sir.
1 crore 10 lakh. Right, sir?
Yes, sir.
What is the capital outstanding? Now work out the capital outstanding. Let
Capital
us say the profit in the first case is 40. Agreed?
Yes, sir.
Business income 40.
Yes, sir.
And capital gain, no capital gain. Profit on sale of asset 75.
Yes, sir.
Am I right? 75?
As per accounting, 75. Yes, sir.
Yes, as per accounting income.
Yes, sir.
75, right? Yeah, 45 and 75. Now 1/3 of this 40. No, sorry, 40 minus 12, 28. Sir,
Yes,
40
sir.
minus 12, 28. I am ready. Do you agree?
Sir, 60 minus 12 or 40 minus 12, sir?
40 minus 12 first. 60, 12,000.
Okay, 28,000.
40
Right.
minus 12,000, 28,000.
28,000. Right, sir.
Am I right?
Yes, sir. Yes, sir.
Second is 75 minus 12 lakh.
63
75
lakhs.
lakh minus 12 lakh, 63 lakh. Am I right, sir?
Yes, sir.
So 63 lakh 28,000.
Sir.
1/3. 21 lakh 9,333.
Yes, sir.
Am I right?
Yes, sir. 21 lakh
What
9.
is your capital?
21 lakh 9,000 we can take. Sir.
Let's say 20 lakh 9,000.
21 lakh 9,000
I told you?
capital is 60 lakhs.
So 81 lakh 9,000.
Yes, sir.
So how much is the capital gain? 28 lakh
91,000. 91,000. Yes, sir.
This is your capital gain tax.
28.91.
This 20 lakh 91,000 to be allocated to the remaining assets. We will go mad doing that because we will have to revalue those assets, and then in proportion to that revaluation, we will allocate this cost.
Sir, sir, I want to ask one question at this juncture, sir. Why this thing was required? Because as far as I have learned,
why
the
this thing was
legislation-
required? People were not paying tax and giving more money to the retiring partner. They said, don't give more money to retiring partner. We are not saying anything to you. We are not going anything. Since we are going to tax you 2 times, one, the 9B for the asset, 9B for the asset, and second, 45.4 also for the asset. So that's why the capital gain, which is there at 45.4, will be allocated to the remaining. The man has gone mad. I don't understand. I told you, why do you want to do that? He says, you have to pay tax here. Then you defer this to the later year. I can't help it. In spite of my telling him so many things, he did not listen. And he has come out with notification 7. After showing that notification, not notification, the example many times to say, I said, I'm not able to understand. Then he gave the last example, which I could understand to some extent. But still, you don't know if there is a short-term capital asset, allocation has to be done to short-term capital asset also. I have made it so simple, but it is not that simple, sir. It is not that simple.
There could have been some simpler way of calculating tax. If tax was being evaded, that
They should have left 9B. There was no need of 45.4 at all. But they say, why are you paying more? You should have paid only up to the 9B. But still you are paying more because we have included the profit of 9B here. Are you noticing?
Yes,
if after including the profit of the asset, then if your capital is same, we are not talking about 45.4 then. They say, why are you paying still more? If there is a capital gain, you have paid tax on that. And after paying tax, you have distributed to the capital account. You have just done it. Then why do you are paying more than that? Why are you paying more? Are you getting my point?
Yes, sir.
There would have been only one tax. 9B read with 45.1. If whatever the property you have earned, you should have credited to the profit and loss account and given him the same amount. Instead of, I will explain to you. Instead of giving him 1 crore 10 lakh, had you given him 81 lakh 9,000, we would not have said anything to you. Why 81 lakh 9,000? His capital 60 lakh plus the profit, all this transaction 21 lakh 9,000. So you should have paid him 81 lakh 9,000. Why are you paying more? Are you getting my point?
Yes, sir. Yes, sir.
If it is 81.9, we are not saying anything to you because then it will be 0. Clear? If you have been able to understand, you are a good student of income tax.
Sir, there's one more question from one more viewer. He says if the firm is paying tax on this 28.91 lakhs, which comes to around 6 lakhs under section 45.4, what about the 6 lakhs tax paid again?
That 28 lakh benefit you have been given for other assets. So that time you will not pay tax. That 28 lakh benefit has been allocated to the other asset. That in future you will not pay tax on that amount. You have paid today. What you are supposed to pay later on, you have paid today. And we have given you the benefit of increase in the value of the remaining asset to the extent of 28 lakh.
Right, sir.
That is what they are saying.
Right.
We have given you the benefit of increase in the asset of 28 lakh. This is the point.
Right, sir. Right, sir. Sure.
Very simple, sir. If you want to do it, pay tax 9B read with 45(1), and whatever is the capital which is there after that taking it, don't pay more.
Okay.
The matter is over. Don't pay more, matter is over.
Right, right.
The matter is over. You want to have a cake and eat it too. That is not possible.
Sir.
Once you have given an asset, please, you pay tax as per 45(1), and then whatever is your profit as per normal accounting principle, after deducting the tax, give him that amount. We will not ask you 45(4) at all.
Right, sir.
Why are we making, you are making it complicated. After including that, you still paying more. Why are you paying more?
Sir.
Are you getting my point? Logic.
Yes.
Logic.
Yes, sir. Yes.
Logic is, what is the need of paying him more when his profit, his share of profit have been already included in the capital? Then pay only that amount. But if
Right.
you want to pay a little more than that, pay
Right.
tax.
Sir.
I don't know whether others have understood or not. You are shaking your head very, I understand. Whether the others have understood or not. I give another example. Please, I give another example. Please wait. I say he is retiring. Him paying him only one asset, land. He is retiring. Resolution is not there, retiring. Okay. The cost of the land is 25. You have given him for 1 crore. Index is 40. What are we charging? 1 crore minus 40 lakh, 60 lakh. Pay tax as if you have sold to other. Instead of selling to partner, you have sold to them. Done. Done. How much? You have paid tax on 60 lakh, 12 lakh. Now, what is his capital who is retiring? Existing capital plus profit on the sale of this asset. How much of profit? You will not calculate an indexation. Without indexation, 75.
Yes.
Am I right?
Yes, sir.
75 lakh minus 12 lakh.
Tax.
Tax paid 63. His share 21.
1/3.
So pay whatever is the capital plus 21.
Sir.
Pay that amount. We will not attract 45(4).
Right. Right.
So simple. So simple. So simple. But you are clever to pay more than what is due. So then pay tax again. Then pay tax again. But that tax, that amount of the capital gain, benefit will be given to you in future cost. Future cost, not here.
Right. Right. Right.
Understood, sir? Now, thoda bahut samajh mein aa gaya. Understood the reason behind it.
Yes.
To some extent, you have been able to appreciate that we should not give more than what is his capital outstanding to avoid 45(4). But you cannot avoid 9B if you are giving money, if you are giving a capital asset as well as stock entry. You can avoid 9B if you give him only money. But how much money? Capital outstanding. When where is the gain? Only capital outstanding. Gave him, thank you very much. No section 9B, no section 45(4). We are relieved. No income tax knowledge required. Income tax knowledge required when you pay only money, but more than his capital. Then also 45(4). You pay him asset also, come to 9B as well as 45. Now you must be understanding the reason.
Yes.
I think I've been able to put you the reason why this has been done. Correct, sir?
Sir. Sir. Yes, sir.
So that is all. That is all what I'm supposed to talk to you. Now you have question, you can ask me any number.
Sir, there's a very long question. It says it's a partnership firm constituted with 10 partners with 20 lakhs capital each. The firm owns a rice mill unit comprising of land measuring about 5 acres, whose cost of acquisition is 10 lakhs, and the WDV is 75 lakhs of fixed assets.
You're talking about WDV. There will
Yes,
be
sir.
short-term capital gain.
Okay, sir. And 8 of the
There will
partners.
be long-term. I gave you the example of land is non-depreciable.
Sir.
When a depreciable asset is transferred, there will be short-term capital gain and not long-term capital gain taxable under section 45.
Okay. Yes, sir. Yes, sir.
Are you getting my point?
Yes, sir. Yes, sir. Yes, sir. Sir, one more question is, sir, when only money is given, there is no need to of allocation to other assets.
If the money is given, 49B is not there.
Right, sir.
And if the money is given more than what is capital, 45.4 will be there.
45.4 is applicable. Yes, sir.
45.4 is applicable. Now you are trying to understand. Now I've seen people nodding their head. Other new people also nodding their head. Otherwise, they were in a statue. They were a statue. They were neither moving this side or that side. They were astonished. What kind of a law is this? But now they are able to understand. Chaliye, next. Any other question on this? Keep on asking. Keep on asking. Clarity will be there only when you answer. You put my question and I answer that question.
Sir, what in a case where money is given more than capital account? So is
Only money is given.
allocations required? Yes, sir.
Only
money is
money
given, but it is over and above the capital of the.
Only money.
Yes, sir. Yes,
9B is not there. 45.4 will be there. Suppose money, whose capital is 1 crore, you have given him 1 crore 20 lakh. 20 lakh will be liable to capital gain tax. But why this have given you more 20 lakh? Must have been revalued some asset or must have created goodwill.
Yes,
then
sir.
whenever you're revaluing that asset, on those assets, that 20 lakh will be attributed to that. But you will have to pay tax on 20 lakh today. But what will it be, short term or long term? Depend upon what kind of asset. If goodwill is created, short term.
And it will be allocated to the partners again.
Obvious.
Yes.
No, not to the partner. No.
Sir, sir.
That 20 lakh which you have paid tax, first we'll see whether it is short term or long term, will depend upon what kind of treatment you have given for giving this extra 20 lakh.
Sir.
The treatment must have been, you might have created a goodwill, revalued. You have created a self-generated asset. Or you have said, I have existing asset whose market value is more. So you have revalued those assets.
Sir.
So if you have revalued that asset, I'll ask you whether that asset was long-term or short-term. If there is a long-term, this capital gain is also long-term. If that was short-term, this capital gain will also be short-term. Suppose you did not, you paid him patent, copyright, you paid him something, you gave him that asset, and that asset is depreciable. If it is depreciable, this 20 lakh will also be short-term capital gain, and that 20 lakh will be allocated to the patents, but not for depreciation. Only when you sell those patents, it will be deducted from the return consideration price.
Sir, one more thing is, sir, what is the situation where an asset is transferred along with a liability thereon? So an asset is being paid.
Sir. You are transferring a capital asset. If you are transferring the liability, that the liability will be deducted from the value of consideration. That's all.
Yes, sir. Yes, sir. So the net value will be treated as the value
Yes.
under section 45. Yes, sir. One more question, sir. One viewer is asking, if cash is paid more than capital amount, is it taxable in the hands of both firm and the partners?
No, only firm.
Firm. Yes, sir.
Only firm. But if you are giving more, I will ask you a question. Why are you giving more? The first answer is some value of the long-term capital asset has increased. So I revalued it. So that amount of 20 lakh will be deducted whenever that asset is sold from the consideration price. I said, no, it is not. I am giving for goodwill. So you create a goodwill. Am I right? So
Yes.
that goodwill cost is self-generated. It will not be deducted even future year because goodwill cost is zero. You have just created it. We are not saying to give you the benefit of that. And if it is for some depreciable asset, then we will say this 20 lakh extra is also short-term capital gain. There can be three things. One, this 20 lakh is because of increase in the value of long-term capital asset. Two, it is creating a goodwill, fictitious asset. Three, it is an asset which is depreciable. So if it is allocated to depreciable assets, short-term capital gain. If it is depreciable to goodwill, short-term capital gain. But if it is allocated to the increase in the long-term capital asset, done. And if it is due to only this asset, no treatment. What kind of this asset was? Long-term to long-term. But no cost allocation. Three possibilities there. No cost allocation. Sir, you keep on asking question, make it round and I'll again repeat it again. Keep on asking.
A firm is constituted by 4 partners. Each partner has 10 lakhs capital in the firm. One of the partner retired and his account was settled by making payment of 10 lakhs.
Thank you very much.
And the firm owned,
either 9B nor 45-4.
Sir, the firm owned immovable property whose cost of acquisition was 2 lakhs and fair market value was 50 lakhs. We are
nothing concerned. Have you given the asset to him?
No, sir. No, sir.
Thank you very much. We have not given any asset to him. 9B not attracted. We have given only money to him, and money is also equal to the amount which had 45-4 not attracted. Yes. So what should I do? A is equal to B minus D. A is equal to B minus D is 0. B minus D is 0. It will be 0. Money minus capital 0.
Sir, people are apprehensive about the attraction of 56-10 in the case.
In the case of money or in the case of
case of property which is there, which is not distributed, but it is lying on the balance sheet of the firm.
Well, how does it matter? If the lying on the balance sheet of the firm has no difference at all. You have given him money. So where is the question? If you give the asset, then only 56-10 comes.
Okay.
If you have given the money equal to the same amount which is due, where is the question of 56-10?
Yes, sir. Yes, sir. Yes, sir.
Or if you give him more money, 56-10, otherwise will not be applicable because you have already charged tax on that.
45-4, yeah. So one more question is, no amount is paid to the partner if his share reduced by reconstituted partnership deed.
No problem. If there is no payment made, no asset given to any partner, nothing happens. You keep on reconstituting your partnership firm. We have no problem. Ultimately, the department is not at a loss because the assets are with the firm only.
Yes.
So whatever there is increase, they will take it at that time. Here you have not done anything.
One more question, sir. Reconstitution of firm by retirement of a partner and admission of his son in his place and the capital transferred by way of gift. Any difference in case of admission of son on death of father?
Not concerned. You have given in the money. He has given this a gift. That's all. Book entry gift, but the same thing, but same amount. Same amount. More amount, capital gain.
Sir, any more questions, please raise in the chat box.
Either they are not able to understand, but otherwise they have put very good questions also. Very good questions have come. And I think I tried my level best to bring down the things to a level where you will be able to understand. Only thing which you are not able to understand properly is attribution. That attribution rule 8AB, you will have to work out yourself and then you will understand. Sir, please read notification 76 as well as this illustration number, example number 2 and 1 and 3. You will be able to understand something.
Sir, what about the change in profit sharing ratios? We haven't talked about.
Nothing. If you don't pay anything, nothing.
Okay.
Profit in changing ratio, but you don't pay anything to loser whose share has been reduced. You have not paid anything to him. No question. No, nothing.
One more question, sir. Is there any chance of 56-10 if FMV is not considered at the time of retirement and assets left with the firm?
You cannot go beyond this unless you take FMV. You have to work out on the basis of FMV. So you cannot do that.
Right, sir. Right, sir. Whether a new partnership deed is to be executed or execution of a codicil is suffice in case of change in terms of...
When there is admission or reversal, you have to redraft the partnership deed. That everybody knows. That is not income tax, sir. That is partnership act.
Deeds, yes. Yes, sir. Please, sir.
Ambarish, allow CA Rajendra Kumar, who is past chairman of Warangal branch. He want to raise a question.
Oh, okay, sir. Okay, sir.
Unmute him.
Unmute him. Yes, sir. We have unmuted him. Please, Rajendra Kumar, sir, go ahead.
Please go on, sir. Please go on.
Rajendra
Yes, sir.
Kumar, sir.
Yes, sir.
Hello.
Hello.
Sir,
Yes,
please
sir.
go ahead, sir. Please ask your
Sir,
question.
in the case of partnership, when a partner is retired, as you said that when the capital more than capital amount, if you paid, it will be taxable in the hands of the partner
No.
because he
in the hands
is
of the
receiving
firm.
more than the capital amount.
No, in the hands of the firm, not the partner.
Sir, you said in example that when 1 crore 30 lakhs he has received instead of 90 70 lakhs, the more than amount what he has received is taxable. You said
45.4, not the
Yes.
partner, firm. Firm will
in the
pay.
hands of the partner it is taxable. No, sir, 45.4.
Partner is not going to be taxed. It is only the firm. 45.4 firm, 49B firm. Partner is not going to be taxed at all.
Sir, even whatever amount he received against his capital is not taxable, sir.
Sir, if he is capital of 1 lakh, you have given him 1 crore, 1 lakh 50,000. He is not going to be taxed. Firm will pay tax on 50,000.
Okay, firm will be payable.
Yes, firm will pay. He will not pay anything. He'll get 150.
But he is receiving more than what he has to receive, you know.
Sir, but you can tax at one place. You have already taxed him at the firm. So why should he be taxed again? The firm has already paid tax on that. Why the firm will pay more 50? Because there is some appreciation in the hands of the firm.
Okay. Thank you, sir. Thank you very much.
No, partner in both the cases are not to pay anything.
Sir,
Both the cases. Okay.
Sir, there is one more question, sir. There is a change in sharing ratio of a partner from 5% to 90% during financial year 2021. During financial year 21-22, payment is made of the capital on the account of increase in share of ratio. What is the effect?
If the payment is made, the capital account, you have given him money, and once you have given him money, the 45.4 will be attracted.
Yes, sir. So it will be the same formula, deducted the value of the original capital on the balance sheet.
Why have you increased his capital? It's where you have paid him the money.
Yes, sir. Yes, sir. Sir, one more question is, what if on passing of JV, equal to capital amount of the demised partner as gift to the legal heirs?
What is the difference of that? Gifting is a different.
Yes, sir.
How much has he got? Has he got more than what he was due? If he has not got more than what was due, there is no question of any tax. Now that money has been paid by him to his son. How does it matter? That is a gift. It doesn't make any difference in that.
Right, sir. Sir, revaluation of assets. All the firm assets are revalued and partners' capital accounts are increased. There is no sale. Will the firm have to pay tax on the revalued amount?
Nothing. The revaluation will not be recognized for income tax point of view.
Yes, sir. Yes, sir.
It will not be recognized. They have already said it will not be recognized from income tax point of view.
Holding price will be the cost. The holding cost will be.
It will not be recognized at all.
Sir, a partner has retired in the year 2021 and excess amount calculated received in the year 21-22. In which year it is
The
taxable?
year of receipt, the taxability is there.
Sir?
Taxability is there in the year of receipt, not at the time of dissolution.
Okay.
At the time of receipt.
Right. What if debtors are taken over by the retiring partner, which is not a capital asset nor money?
Pardon me, what is?
What if the debtors are taken over by the retiring partner?
Can there be a profit on this giving the debtors? Can there be a profit? Can there be a profit? Can there be a market value of the debtors? It can be less, not more.
Yes, sir. Yes, sir. So it is as good as taking out capital, nothing more than that.
Any other question now?
Yes.
Any of the members, do you want to ask anything? Sir, one more question from CA Ramdev Bhutra. New partners are admitted with capital contribution and profit sharing ratio altered, and further capital of existing partners reduced due to withdrawals. What will be the implications?
No, if he brings a capital, we have no problem. But if you, due to that, you make a goodwill and credit the partner's account, certain amount, then it will be 45-4.
Yes, yes.
We don't want to touch your capital. Why do you increase your capital? By taking, creating a goodwill.
Any further questions, sir?
I advise all of you to please go home, or you are sitting at home, no problem. But whenever you get time, read 976 and circular number 14. Unless you read yourself, any number of time, any number of examples you may be given, you will not be able to understand unless you go back home or you sit at home and read this. I'm telling you. Then you will be able to, that my face will come in front of you when you are reading, and you will be able to understand it.
One question is there.
Yes, sir,
Chat box.
Okay. Is there a difference between getting firm registration and partnership deed registration?
Pardon me?
What is the difference between getting a firm registration and partnership deed registration? It's not
one and the same thing. Or you get your register, the registrar of firm, you get yourself registered, is a firm registration.
Yes.
Partnership deed registration is where? It's only on a stamp paper, you go and register that. It is the registration of the firm. I don't know what is the difference.
Sir, over to C. Hari Krishna, the Secretary of the Warangal Plans.
Barish, I think not yet completed speaker's presentation.
Okay, okay.
Since maybe over, but speaker's presentation is, I think still it is there. I request the speaker, please continue with your presentation, sir. There is no time.
It's all complete. Nothing is left.
Sir.
Nothing is left. I've given you everything with the help of examples.
Sir.
Nothing is left. Except Rule 8AB, which you will have to read yourself. I've told you Rule 8AB, but you will have to read it with example. Rule 8AB, read with example 1, 3, 2, 3, 4. Then you will be able to understand. There are 3 examples are there, not 4, 3. From my side, everything is complete.
So can you throw some light on assessment of partners?
What assessment of partner?
At the time of reconstitution and admission and retirement.
Where is the question of assessment of partner when firm has to pay tax on that? Whatever share of profit he receives is fully exempt. We are taxing the firm and not the partners. We are taxing the firm and not the partner. And whatever amount he receives, it is exempt. If he receives more than that amount, it is also exempt under section 10(2)(a). If he receives more than the amount, the balance is exempt because he got it as a profit.
The partnership said 3 partners are there and 2 partners are died. Then it will be resolution. Even okay.
When only one partner remains, it is dissolution. But if you more than one partner are there and your partnership deed says that it can continue, then there is no dissolution, it is retirement. If the partnership firm has to continue, they need to have minimum 2. If out of the 2 or 3, 2 die, dissolution. If 1 die, you can continue. If out of 4, 2 die, you can continue.
The new income tax site is very, can you throw some light on?
No, that they are not supposed to talk to you, and I can't say will they do anything, because I my inverted comma, I don't want to tell anything. Mr. Jaitley is not there, so I can't say anything now.
Dear participants, if anyone wants to raise questions or queries, you can raise your hand, or you can post your question in chat box.
Any query, income tax, any query?
Sir,
Ready?
sir, the earlier query where there was a change in sharing ratio of a partner from 5% to 90% during a financial year 2021, and during financial year 21-22, the payment is made of the capital on account of increase in the sharing ratio. What is the effect?
You have paid the next year out of the profit.
Sir.
On profit, the government has already charged tax. You have already paid tax on that. How can they charge tax whether A receives or B receives or C receives it?
Okay. So it's only a question of...
Getting my point.
Sir.
How does it matter whether A receives, B receives, C receives, share of profit received by a partner is fully exempt? The matter is over. If you have paid tax on that, no question.
Okay.
Partners transferred asset along with the liability.
I have already answered.
That's okay. To disclose one question is this.
Where to disclose the details in a partnership form?
Pardon me?
Where do we disclose the details in a partnership?
Form 5C will be filled up.
Yes, sir. As per Rule 8AB, Form 5C.
5C you will have to fill up and give it along with the return,
right,
or whatever details you are there.
Right. So that's an additional form to be filled up.
Yes, Form C, 5C.
Dear participants, if any queries, can chat box. We are closing the session. Almost there. If you have any queries, please post.
If you have not query at the appropriate time, nobody would have understood anything.
Yes, sir.
The query have been asked at the appropriate time. That's why we've been able to understand to some extent.
Yes, sir. Sir, one more query here. Whether any case law in support of partner brings cash in excess of rupees 2 lakhs as capital or additional capital? Sorry, I'm unable to understand the question.
So far, they are saying that if you are receiving more than 2 lakh withdrawal or introduction of capital of 2 lakh, whether section 269 ST will be applicable or not.
Yes,
according to me, it should be made applicable. Because income tax says partnership firm is different from partners.
Right, sir.
As per partnership law says, there is no difference.
Right, sir. Right, sir.
Whether it is applicable or not, sir, not applicable.
Why should we give more than 2 lakh in cash? Don't do back entries. This is not the right time to do such things now. Gone are the days. Please be honest and tell your client be honest now. 360-degree profile, and you should not apply 269 ST. Maybe litigation you may win, but it should be avoided to the maximum extent. I'm telling you. I don't know why do you want to do cash transaction? Why I don't understand. When it is white money, you transfer from the bank. What is the need of bringing in by cash? or you send to do it by RTGS. Why do you want online banking? Why there is a need to do cash?
And even in faceless environment, it will be more of a problem.
Cash always will attract some suspicion. Why cash? Why not by check? Why cash? These are all bogus entry which are done by cash. I'm very particular. Please tell your client, leave those bad habits. You will be in a difficulty later on if you are doing like that. Chali, let us close the session now.
Sir, over to the Secretary of Warangal branch.
Thank you, Ambarish Garu. Now, special thanks to today's speaker, CA Girish Ahuja Garu, Dr. Girish Ahuja Garu. Excellent presentation with the practical questions answered, and most of the participants' doubts, queries cleared very lucid manner, and it was excellent presentation. And it's a great honor for the Karimnagar, Warangal, and Nizamabad chapters sharing screen with you, sir. A great opportunity for us. Now I request CA G Ravikumar Garu, our past or present Warangal chairman, to give a token of advance as a certificate, token of appreciation from our branches and chapters. Over to you, sir. We are giving you an e-certificate, sir. We will be sending you the physical copy to you, sir.
I have not seen yet. Show me. I humbly accept now.
Please kindly accept from our branch chairman, Warangal branch chairman, CAG Ravikumar Garu.
Thank you. Thank you.
Sir,
Thank you very much.
Sir, we have no words to praise you, sir.
Thank you. Thank you.
Sir, yeah, sir, it was a pleasure, sir. It was a huge pleasure, and it can be called a blessing, sir, from such an eminent authority like yours. If we are able to share the screen, if we are able to ask to you, if we are communicate to you, it's our privilege, sir, and this will not forget for our lifetime.
Thank you, sir. Thank you. Take care. Take care. Take care. Thank you.
Thank you, sir. Thank you, participants,
Sir, you are on mute, Hari Krishna ji.
Thank you, sir. Thank you, sir. Thank you so much. Thank you all the members for making this program as a grand success. We are expecting the same cooperation in the future, virtual seminars and offline seminars. Thank you, sir. Thank you.
Thank you one and all, sir. Thank you.
Thank you one.
Thank you all.